Class is in session. Welcome to Outlier University. I am so freaking stoked. Starting today, every Tuesday and Thursday afternoon, we will be coming to you live, and you're going to learn literally everything that I know about trading. And joining me for Outlier University are a handful of some hand-selected, incredibly handsome, amazingly talented, and intellectual? Yeah, that's the word. The bestest guys I've ever seen ever. And I'm going to introduce them one by one. Paul Denizen. Welcome, Paul. Thank you so much for being here and part of Outlier University.
Thank you, Chris. I'm glad to be here.
I'm so stoked. Next up is Joe. Joe, what is going on?
Hey, Chris. Hey, team. Boy, am I ready for Outlier University.
Let's do it. Next is the man himself, Deep Thought. Or is he a computer? We'll have to see. He's a man.
No, he's a human. Hiya.
All right. Next is Mikey Mike. How you doing, Mikey Mike?
I'm awesome. I'm glad to be here.
Dude, me too. I'm so stoked that you're here. Next is Dave. Dave, what's going on?
Hey, making money. It's a great day. Excited to be here.
Let's go. Next is Salty Dog, also known as Salty Brad. He's still salty all over the place. What's going on, Salty Brad?
Doing good, man. Excited.
Very cool. Next is going to be Aussie Ian, all the way from Australia. Aussie Ian, how are you, my friend?
Good, guys. How are you? So looking forward to this.
Oh, man, this is so cool. And last, but probably the most influential of all of them in the boat is JC. JC is the man who came up with the idea for Outlier University to make sure that we do everything possible to teach as best as we possibly can. Big respects to JC. Everybody in the chat type JC because he definitely earned that.
Dude, I'm back in school. I'm so jacked up. I haven't been in college in, I don't know, 30 years. And I feel like I'm in college. Like notepads, computer. I'm telling everybody, I have a course at 3 o'clock. Block me out.
That's right. And don't you dare miss an episode. Don't you dare miss a single lecture.
I'm already thinking. I've got 2 travel trips. I'm already thinking about how it's going to get done in a cabin in the North Carolinas with no reception. I'm already got Starlink happening over there. There's a plane trip that I have to negotiate. But outside of that, I'm in every single one.
Outstanding. JC, I am so stoked that you're here. And I'm stoked that all of you are here live with us, and stoked that we have over 400 people watching us live right now. So no pressure.
Wow.
Just don't be picking your nose or anything weird on the screen like that. Everybody's going to remember, right? But hey, if it's all right with you guys, let me introduce myself real quick for those who don't know me. Let me share my screen too. Let me share my screen and introduce myself. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So for those of you watching, you probably should go ahead and subscribe if you haven't already. So if it's all right with you guys, do you mind if I share my story? I would love to share my story and let you guys know where I came from, the whole process that got me to get me here to hang out with you guys. Is that all right?
Sure. Do it. Love to. Cool. Love to hear it.
All right. So let's see. So back when I was a young lad, my dad pulled me aside and he was like, listen, I just bought some stock in some gold miner companies. I probably could have been 8 or 10. I just bought some stock in some gold miner companies. I'm like, okay, what does that mean? And he's like, so if they strike gold, we're rich. I was like, wait, what? So you're telling me if this company strikes gold, which is their job, that we're going to be rich? All right, that sounds good. So I was so captivated by that. And one thing my dad would do all the time was he would buy single shares of stock as gifts. I remember he got my mom a share of Microsoft because my mom was a controller for a company, eventually CFO. And he was like, hey, I know you love working with Excel. Here's a share of Microsoft. Isn't that nice? And she's like, yeah, great, thanks. But I remember specifically when I graduated college, he got me a share of the Boston Beer Company for Sam Adams. I had not discovered Guinness at that time, but had I known better. So he got me a share of the Boston Beer Company and got it framed and everything. I'll never forget. It has this little placard on the bottom here that says some liquid assets for your portfolio. And I was like, that is so cool. I really appreciate it because while I was in college, I was absolutely fascinated by stocks. I got my undergrad at Henderson State University in Arkadelphia, Arkansas, very small school. And then I was working on my MBA at the same place. And while I was working on my MBA, I was part of the Student Managed Investment Fund. So in that fund, we were entrusted with the endowment of the school, right? We had to come up with our investing thesis, and then they would put on the trades based on what we said. And, you know, of course, every one that we put on, we were so emotionally charged behind it. My dad rode Harleys, I rode Harleys. And so, of course, my pick was Harley Davidson, right? And this is in the middle of 2008 when every stock is going. There was no stock to buy at that time. But of course, we all had our biases on it. But after I got out of college, I went to work at Raytheon in corporate finance. And at Raytheon, my project was the Predator and Reaper drones, the missile targeting systems on those. This is, in case you're wondering, is a MTS-B, missile targeting system B, and this aperture right here can see about 10 miles away. And that was a really cool project. I loved being able to be a part of the Department of Defense working on that. But while I was there, I also spent some time working on trading models. Specifically, I remember downloading as much data as I could on the company's clock, on the company's computer, by the way, and going through and thinking, okay, how can I make some money, right? And I remember a couple times, every once in a while, I would strike it hot. And I'll never forget the time I was in the showering, you know, when I had 60% of my hair instead of 40%, showering, working on my hair. And I'm like, man, I'm such a freaking genius. I just made $800 in this trade. I am probably the next Warren Buffett, right? It's not going to get any easier than this. It definitely can't get harder than this. I got it, right? Of course that didn't work. But eventually, I kind of lost interest in trading, started focusing on my career, and I moved into a consulting role. And my job at the consulting role was to show credit unions how to make more money and reduce risk. Sounds pretty similar to what I do today for you guys, doesn't it? So one day I was in the consulting role, I was in the office, and my boss at the time was talking to somebody else, and he's like, hey, if you feel so strongly about Deutsche Bank going down, why don't you go out and buy puts on Deutsche Bank? And I perked up and I'm like, wait a minute, man, this is one of those moments that changed my life. Perked up and I'm like, puts. I remember something about puts. What is he talking about? So I pulled out this book, which I still have to this day. I was one of those nerds who kept all my textbooks on the table while I was working. I pulled out this book, and the two tabs are still there. One says stock, or one says options, and one says bonds. And so I went to the options page. I flipped this open, and page 571. A couple notes on there, a couple highlights from me on there as well. And it says a put increases in value as the price of the stock goes down. I was like, oh, okay, yeah, okay, got it. Right. Puts increase in value as the price stock goes down. No problem, right? So I was like, all right, well, let's go look at an options chain. So I pulled up the first option chain that I could, and it looked something like this. And I remember the deer in the headlights look I had at that moment. And you've probably been there too, right? I bet the first time you popped open an option chain, you're like, what in the wide world of sports is this? Right. I remember vividly saying to myself, I have no idea what all these numbers mean. I just want to make money. I don't know what this means. I just want to make money. Where do I start? So I deep dived into trading options, right? I researched hours and hours and hours because I'm not somebody who like tiptoes into something. When I want to do something, I jump in with both feet, you know, all the way. And I found some strategies that promised me 83% win rates. So I was like, well, 83% win rates can't go wrong. So I cashed out a 401k from Raytheon that I never once contributed to. They had contributed every single cent of this. And I needed $5,000 to open my account. When I got the check in the mail, after taxes, after penalties, after everything else, the check, I'll never forget this, standing in my kitchen, ripping over the check, I'm so excited, was $5,000.15. Like, it still gives me goosebumps. It was exactly $5,000.15. And I remember that was a moment when I was like, this is God telling me something. This was not coincidence that I needed exactly this amount, and this is exactly what I got. And so I was like, all right, well, here we go. Let me start trading with these 83% win rates. And that's what I was promised, and that's what I had. And it was awesome, right? All you had to do was sell calls and sell puts, sell options, right? And you just sell them and you collect the money. It couldn't be easier. But nobody told me in that process that I'd be risking basically 10 to 1, meaning that each loss I took would make me about 10 trades to make back. Sometimes 8, sometimes 12, but give or take around 10 trades to make back every time I lost, which I had no idea. And so I did that, and I felt like a failure because I couldn't make money. It was like I had discovered the hard way to trade. Everything that I did, I was winning on my trades, but I was losing on balance, meaning at the end of the month, at the end of the year, I had less money in my account than I did when I started because I had 83% win rates, but with a 10 to 1 risk return, the math was never going to work. Never going to work. But the frustrating part about it was everyone that I followed was making money. Everyone that I followed was making money. Except me? Right? How could I be the one person? How could I be the one person who was failing at this? Now, I think it was more of everybody was only sharing their wins, which is how social media goes, versus talking about their losses. And so I started reading all the trading books, and I made some amazing connections, and I had a couple really unbelievably lucky breaks. Once again, saying that I know that this was the path that God put me on. And I started learning directly from the market wizards. I learned from, hang on, I did this. This is going to look better. I learned from market wizard Tom Basso. I learned from market wizard Larry Height. I learned from market wizard Jack Schwager. I learned from market wizard Jason Shapiro. I learned from market wizard Mark Marinvini. Most people would say that Mark is potentially the best trader of all time. But the person who made the biggest difference in my life was Steve Burns. Steve Burns, not a market wizard yet. In fact, I asked him about it. He's like, listen, they want to go through like 20 years of bank statements. And the last thing I want to do is have somebody go through all my data like that. So I don't even care. So he probably would be a market wizard if he was up to that sort of notoriety. But Steve taught me, and everybody else taught me about trend following, which is what I'm going to teach you about. They taught me about position sizing, which I'm going to teach you about. They taught me about cutting losses, which I'm going to teach you about. They taught me about letting winners run out of control. I'll never forget the first time I heard that. Cutting your losers short and letting your winners run out of control. I was like, yes, please. Because I just got off the other end of it where I was like, let your losses run. I kid you not. The first people that I learned to trade from would say, let your losses run and then cut your winners short, because that way you have more money in the bank to trade with. And those losses, they'll come back. I won't name names. I'll probably name names eventually, but there were a couple times where I was like, are you serious? Let my losses run out of control because they'll eventually come back. Have you ever heard of trend following? It could be years before this comes back, if it ever comes back. And yet I'm supposed to hold during that entire time? This is so stupid. This is so stupid. So that's when I learned that I needed to work with other people, right? So letting your winners run out of control. But one thing that I still didn't understand was, how do I find the winners, right? I worked with these guys. I learned so much from them, but I still was struggling to find those winners. And that's when our friends Mark and Mahesh came along. So these are the two co-founders of Outlier. And also there was another company that they partnered with me earlier for called Fin Club. And Mark and Mahesh were like, hey, can we show you something amazing, Chris? And I'm like, well, yeah, of course. Show me something amazing. Let's go. And at first I didn't get it, right? It was this one chart per stock, lots of purple, lots of yellow. And I remember Mark specifically spending literally like 2 to 3 hours at a time explaining how it works. And I'm like, okay, that sounds great. Yeah, awesome. And then I'd get off the call and be like, I have no freaking idea what he's talking about. I am so clueless. Oh man, sounds great, but I got nothing. So I didn't get it. But 6 months later, they came back and they're like, hey, can we show you something amazing again? And of course I'm like, okay, sure. And this time it blew my mind. This time changed everything, right? They were showing me returns like this. Now this is Outlier like 1.0. We're on Outlier 3.0 at this point. Outlier showing on GameStop 885%. They showed me returns like Tesla at 1,062%. They showed me returns like Mara with a 2,800%. It was unbelievable. I was like, what is happening right now? These guys changed everything for me. So my returns for the last few years, since starting working with them, 172% in 2021. I lost 20% in 2022. Now that's more on me than for them. Gained 5% in 2023 as I was still figuring things out with Outlier. In 2024, made 91% because I feel like I figured it out at that point. And my compound annual growth rate was 43.54% over the last 4 years since meeting Mark and Mahesh. So growing your account on average 43.54% per year sounds pretty good, right? Sounds pretty good. So I had started a company when I started trading because I want to make sure I was, legit and doing everything right. And I sold my company 10minutestocktrader.com to them in exchange for equity. Now, 10minutestocktrader.com was where I was learning to trade and, putting things out on the internet, talking about it. And I called it 10minutestocktrader.com because I did all of my trades from this very iPad under my desk, had a data plan under my desk. I would go on my iPad and be like, okay, I got to buy calls and sell, or got to sell calls and buy puts and do all this stuff, right? And eventually, after figuring that out, I finally learned how to make money in the markets. It was amazing. It was amazing. So I sold my company to them in exchange for equity and outlier. That's how we got here, right? Because I knew that this was special. And I figured out how to trade with this data. And so did several other people, like you guys on the line right now, a lot of you who are in the chat today. And here's a couple examples of people like Goran and Leo, 181% gain on this particular trade, D and 4032. This was $377, and to this person right here, that was a huge win for them, right? That's why I don't like to share numbers. I like to share percentages because everybody can have the same percentages. But to this person, this $377 could have been life-changing to them, right? And then this person here earned $391, and this person here earned $3,000, right? It's all about figuring out a plan that works for you using the data that we have. But, and I'm coming to the end of the story pretty quick here, but I was still working in corporate finance, okay? And I was doing this while working from home, and I'd made over 2,000 YouTube videos with no traction whatsoever. Here's what it looked like just a few months ago, right? 41 views, 199 views, 57 views, 13 views, 23 views, right? All of this noise that I was putting out there wasn't getting any traction. And one thing that was driving me absolutely crazy in the corporate finance world was they were like, it was like crabs in a bucket. I don't know if you've heard of that phrase, but it's like, if one crab starts to do better for themselves, all the other crabs are like, where do you think you're going? You get back down here with us, right? And so I was the crab trying to escape out the bucket, and I had everybody around me trying to pull me down. And the worst offense was I was working one day in the office. Didn't happen all that often, but I was in the office and I had a nice watch on. And one of my coworkers was like, that's a nice watch. They must be paying you way too much. And I looked at them and I'm like, I don't know what to tell you. Like, I'm not part of this anymore. Like, I have way bigger dreams than this. And then a couple months ago, like in 2025, they said I would have to start coming in the office on Tuesdays. And this was going to start March, and this is May. So this is super recent. They told me I'd have to start coming in the office on Tuesday, starting like March 2nd or something like that. And then they're like, oh, wait a minute. No, sorry. It's actually going to be Mondays, Tuesdays, and Wednesdays. And I've been working from home, doing Outlier, doing everything on my own for 5 years at this point. And I just said, no, I'm not coming in. I said, we can work this out. I can continue to work from home. I can continue to do Outlier, but I'm not coming in the office. It's not going to happen. So I prayed and I prayed and I prayed, and that something would work out. And that was the month that YouTube actually figured everything out. Actually, this was in January when I got the notice. That was the month I figured out everything. January 6th. I remember that. I'll never forget the date. And my videos went from, like 20 views to 2,000, 4,000, 5,000, 8,000, 4,000, 15,000, 36,000. Everything changed all at once, which is another reason why I say I feel like I've been on the right track. And because of YouTube, that's how you found me. I have no doubt about that whatsoever. Because of YouTube, that's how you found me. That's how you found Outlier. And I took the leap. I quit my job. This is actually the first time I've ever talked about it in 2025. I kept that pretty close to the vest. But I quit my job and became a full-time trader and YouTuber. And my official title is Chief Marketing Officer for Outlier. And I had plenty of money in the bank, right? And this was a big risk that I took. And my wife and I, we lost a lot of sleep, said a lot of prayers. So I was like, listen, we got money in the bank. We're going to be okay if things don't go right. But I have a feeling like we're on the right track. Everything is just working out exactly like it needs to. And I'm telling you right now that this was the best decision of my life. So now I get to show you everything that I've learned along that way in OVTLYR University. So thank you guys for allowing me to spend a minute talking about my past. I'm really excited to share with you everything that I've learned. And now today, I will have to do some trading. So I'll try and do that here in about 10 minutes. and I'll try and keep that as minimum as possible, but we're going to focus on the lesson from this point forward. So does that sound good? Give me a thumbs up if that sounds good, everybody. Excellent, excellent. And for those of you in the chat, we're going to spend about 10 to 15 minutes at the end of this lesson going through your questions. So keep them coming. I'll do my very best to answer as many as possible, and we'll get back over to it. So lesson number one, before you trade, understand what you're trading. Now, as we go through this is going to be very basic, okay? This is intentionally supposed to be extremely basic, because we want to make sure that we're starting with a full foundation. And as JC told me whenever he had this conversation with me, he said, Chris, I don't even know how to spell stock, let alone know how to trade it. So I need you to show me everything from start to bottom. And I'm like, all right, let's go, JC. Let's do this. So I'm going to unmute you guys here. Oh, I can't unmute the guest. You have to choose to unmute yourselves. And as I go, please interrupt me and ask any questions. But like I say, this is probably going to be this will be the easiest lesson. A lot of this you're going to know, a lot of this you're going to understand, but I'm also going to be asking you questions, right? A little bit of Socratic method going on here. And like I say, I'm going to give about 10 minutes of this lesson. I'll jump over, make the trades I need to make, and then we'll come back to this. Let me set a timer over here. Boom. All right. I've got a 10-minute and 30-second timer going. All right. So what is money? What is money? That's a kind of random thing to start with, right? But we really need to conceptualize what is money in order to get to trading. Money is something that people use to buy and sell instead of trading objects, right? So when I crack open my wallet, right, and I've got all these dollar bills here, right, how much am I going to give you to buy whatever I'm going to buy? Whether it's an iPhone, whether it's a DuckTales mug, whatever the case is, I need to be sure that I have enough money that I can exchange with you. Now, money is something people use to buy and sell, right? And long ago, people used to trade things like cows or rice, and this was called bartering. So, for example, if I needed a new iPhone, I would have to come up with, I don't know, probably like 700 bullhorns to trade with you guys in order to buy the iPhone. But I doubt that any of you guys need 700 bullhorns, right? Just not something people come across. So it didn't really make a lot of sense for us to barter on that. So money made it easier to trade anything with anyone, even strangers. And today, money comes in credit cards, cash, even digital apps, right? And businesses use money to buy supplies, goods, pay workers, and grow, right? So we're understanding the concept here. We're trying to be as elementary as possible. Now, what is a company? A company is a group of people, like imagine us at Outlier. There's me, Mark, Mahesh, there's April, Rudes, there's Simon, and then we have other people who help with our dev team. What is a company? A company is a group of people working together to make or sell something. So we sell software, which is Outlier. For example, Apple makes phones, Nike sells shoes, McDonald's sells burgers, and companies can be big or small. Companies need money to grow. This is a fact, right? Companies need money to grow. Otherwise, they don't exist. So they might sell a part of that business. So for example, if Outlier needed, $20 million, we could go find an investor and say, hey, we need $20 million. We'll give you X percent of return for Outlier so that we can use that $20 million to grow. So that investor, in theory, should get a return on that investment at some point. So when you buy a stock, you're buying a piece of that company. Now, I explain this to my children. I have a 13-year-old and a 10-year-old. And every once in a while, I get to chat with them about what dad does for a living. And they're like, well, what is a stock? I'm like, it's a fractional share of a company. Okay, what do you do with it? Well, I buy it. Well, then what? Then I sell it. And they're like, well, why would somebody buy it from you for more than what you bought it for? Because I'm catching it while the price is going up. But what about that other guy on YouTube, the Joker? He seems to be buying everything when the prices are going down. Yeah, because he sucks, right? There's a great way to trade stocks, and there's a sucky way to trade stocks. I'm going to teach you the right way to trade stocks, okay? Now, what does it mean to own part of a company? If you own a stock, you own a small piece of that company. You're not the boss, right? I'm not the boss of Steve Jobs. Not Steve Jobs, he's dead. Tim Apple. I'm not the boss of Tim Apple, right? I'm not the boss of Nadia, whatever his name is, over at Microsoft. But I can own a piece of their company, right? But I do share in the success or failure of the company, if you want to think of it that way. And if the company does well, your stock can go up in value. Emphasis on the can, doesn't always. And that's what we talk about when fundamentals come into play, is that it can have the best, you can have the best company in the world, but if nobody wants to buy the stock, if nobody else wants to be a owner of that company, the price will come down. Okay. And sometimes companies share their profits with owners, and that's called a dividend. So owning a stock is like owning one big slice of pizza. Others have slices too, right? So for example, let's say that we had an Outlier U company here. All 9 of us would be owners of that company, right? Some of us may have bigger slices of pizza than others, but we would all be owners of the company. So at this point here, let me ask you guys, do you have any questions on the material we've covered so far?
No, it's pretty clear, Chris.
Very cool. Yeah. Like I say, this first couple lessons are going to be really basic. So I just want to help you out in the best way that I can. Next, what is a stock? A stock, like we talked about a minute ago, is a tiny piece of a company that you can buy. Now, stocks are bought and sold every day by people all over the world, right? We are all over the world right now watching this live. We are all over the world here meeting in this room right now. And people transact with us all over the world, right? So if I go and I buy Palantir calls from somebody, that person on the other end sold me their calls, and they could be in Australia with Aussie Ian, or they could be in Arizona with Dave, right? We don't know. It doesn't matter, because that is what the market is for. We want to make sure that we can find somewhere to transact. So when I own the stock, or when you own the stock, you are a shareholder. Stocks can go up or down, right? So if you own the stock, right, as we know, there is a phrase that we no longer say anymore because it's trademarked, and screw that guy. But what we say now is that profits follow price. Okay? Profits follow price. Stocks go up, you make money. Stocks go down, you lose money. I think a caveman could understand that. But some people on the YouTubes don't get it. And I think it's more pride than anything. I think they're like, well, I can't go out on the YouTubes and talk about how I lost money on this. Move on. Just get it, get out, move on. Right? You don't have to hold it on the way down. But here's the other thing. You don't physically get the item. It's all tracked digitally. Now, I mentioned earlier how my dad would give gifts as single shares of stock, like they would be framed and everything. And I think you can still do that. But the process is cumbersome. It is expensive, and it is not worth your time. Right? The brokers, which we'll talk about in a little bit, the brokers go out and they help you accumulate that asset in as easy as possible. As easy as possible. No longer are you walking into Edward Jones. In fact, I remember my dad telling me about this years ago. No, it was Mark Minervini, who is nothing like my dad. Mark Minervini was telling me one time, he was like, back in the day, we used to go right into the broker's office. Let's say it was Edward Jones or Charles Schwab or whatever. You'd have to have the conversation with the broker, be like, hey, Joe, how you doing? And Mark would be like, I'm doing great. Thanks for asking. I don't care. Just execute this trade for me. And I remember him telling me one time that he would go into the office or he'd pick up the phone. He'd pick up the phone when he couldn't bear to go in the office and talk to this guy. Because, the guy would always have some sort of opinion. Oh, you're buying Palantir stock here, huh? Yeah? You really sure you want to do that? And he's like, yeah, of course I want to do that. And so when he wins, he doesn't mind going in the office and be like, yep, cash me out. Thank you, sir. But when he didn't win, of course, he'd call up the guy, and then that I don't want to deal with this guy's attitude. I don't want to deal with him. And he'd be like, oh, yeah, how's those Palantir shares treating you, huh? And you're like, shut up and execute my trade, okay? I don't care. Move on. Thankfully, we don't have to deal with that anymore, right? All we got to do is click a couple buttons in, click a couple buttons out. We're on our way, right? But also, the expense of trading a stock has changed dramatically. I remember this is where I was thinking about my dad telling me that just to do the transaction, just to walk in the door to make the transaction was $50 in the door, right? $50 out the door. If you're you have to trade a good amount of size to even break even just on the transaction, just on the transaction fee, let alone the per share fee that they're going to charge on top of that, right? So $100 a round trip just to get started, plus a per share fee. It was almost impossible years ago to do this profitably. But now, just click a couple buttons. Depending on your broker, it might even be next to free, which is awesome, right? We have it so easy, we don't even realize how good we have it. Now, why do people buy stocks? Right? To make money. if the stock goes up in value. That's what we all want to do, right? We all want to have more money in our bank account today than we did yesterday to earn extra money if the company pays dividends. That's how my parents operated. To buy a stock, they need to make sure that they have a dividend coming back to them. They didn't care if the price of the stock was going up or down, as long as they get a 2% dividend a year. That's all they cared about. Some people would buy a stock to build wealth over time for big goals like retirement. Now that's one of the biggest ways that the market works, is that every 2 weeks, every week, every month, big chunks of money are coming into the market week after week after week because of people continuing to buy stocks week after week in their pension funds, in their mutual funds, in their company-sponsored 401ks, whatever the case is. And so that's a lot of what the market is right there, is just people saving for retirement. And they want to feel involved in the companies they believe in, right? I love the stock. I love Palantir. I love AMD. I love the company. I love what they're doing. So I want to be involved in that. I'm a SoFi bro, right? They're going to write it on my tombstone. Chris was a SoFi bro to the very bitter end, right? Something like that. Not me. This is the other Chris. And of course, sometimes they do it because banks offer low interest and stocks can grow faster. And I think a lot of the last few years had a lot to do with that too. When banks are next to zero and somebody's like, well, why would I put my money in the bank when I could go out and buy SoFi stock and potentially make double, triple my money, right? I would love to do that too. That makes total sense. I get that completely. So next is, how do stocks go up and down? So we're going to pause here and I'm going to have to execute my trading plan before the market closes. So we're going to shift gears if you guys don't mind. And I'm actually going to go through it really quickly. I already made my plan for the day, so it shouldn't take very long, but I need to do this because this is my obligation to my trading plan. So if you guys don't mind, I'm going to do it like this for all of us. We're going to go through my plan. We're going to execute the plan, and then we're going to move on. All right. So in the Discord, in the Outlier trading room, I wrote down everything that I was going to do. So I'm going to do that right now. Hood will close today. It hit my heat map target. So let's go look at Robin the Hood real quick. Here, up 10% today. Can you believe this? Robin Hood up 9.83%. Now, I had written on here, sell into strength to close at 69. Hood on the heat map in Outlier just hit 70.71. So I need to close that. I rolled yesterday up. Let me get my notes over here. And actually, my notes are over here. We rolled from the 48 to the 53 calls. And when we did, we took in $4.12. So now I need to close the 53 calls on Hood. Give me just a moment to log into the business account on the other screen. Tremendous trade. I wish I could spend more time talking about it today, but we'll do that tomorrow. Tremendous gain on Robinhood. All right, so I'm closing Robinhood, closing full position. The May 30th, 53 calls. May 30th, 53 calls. So this would be a sell to close. Right, so this would look like sell to close. Thank you, Paul, for pointing that out, that it down here shows you what it's looking at. That's what I'm doing. I'm doing sell to close the, not the 53 calls, right. All right, so see where I can get filled at. Bid price 1065, submit the order. Filled at 1065, so I'm out of Robinhood at 1065. Tremendous trade, oh my gosh.
For some
that's
reason,
awesome.
it jumps back to sell to open.
Oh, it doesn't matter. I mean, I'm doing it on the other screen, so it's fine. Yeah, that was a huge trade. That was a 96.93% gain. Let's frickin' go. Let's frickin' go. Okay. Details will be.
Okay.
Yeah, it's okay.
It's all right. All right. That's awesome.
Okay. All filled. Yes, all filled. Good. All right, done with Robinhood. We're going to go to the next one. Etsy. So earlier I said no reason to close, but I did notice it was looking kind of ugly. If it goes under its 50 EMA, I don't want it. It's not under it right now. It's actually right at opening right now. So I'm going to hold it. Holding it because that's the trading plan. Moving on. Next one here is GM. I did put a note out there. If GM goes over 50.70, I'll roll it. Let's go see GM right now. It's at 50, 55. Not quite to that 2 ATR point. So I don't have to roll it just yet. So I can keep it. I don't have to do anything with GM. Also a giant trade right there. What is this one putting at?
Awesome.
395. So I rolled it for 355. Now it's worth an additional 395. So I bought it for 475. Current value of the two options is at 750, which is a 57% gain. I ain't mad. Ain't mad. Okay. And let's also give some perspective here. It's gone up what, $3? And I've made 57%. That's how it's done. Okay. Next one. Okay, Hood, Etsy, GM, Datadog. Must roll again today. Aw. How bad. We have to roll it again because it's over our second ATR. Let's freaking go. Okay, so earlier I priced it out and I was going to roll from the 106 to the 110. Here's the deal. When I roll it up, if I can get filled at 352 or greater, I have absolutely zero risk in the trade. Let me rephrase. Let me put that into greater terms. If I roll it up, I have absolutely no risk in the trade whatsoever. I have made more money than I could possibly ever have any risk for in this trade, and the trade is still alive. Can't do that with stock. Can't do that with stock. All right, so let me go do that real quick. From the 106 to the 110, and this is on Datadog from the May 23rd. I'll tell you what, tomorrow morning's live stream, I'll spend some time going through that real quick. All the details. So going from the 106 to 110. So sell to close the 106, buy to open the 110, 350. Oh man, if I can get 352, we're good. But if we only get 350, I can live with that. I can live with that. So 106 to 110. I'm going to try it at 355. Because why not? Working 355.
What strike did you say you're going after?
Leaving the 106, moving up to the 110.
Okay.
See, liquidity here is really good. 1,074 versus 23 or 48. That's why I'm going for that one. Okay, let's replace. I'm not getting filled at 355. Let's jump it to 350. Build average fill price 350. Oh, daggum. I have 2 measly cents of risk. 2 measly cents of risk in this trade. That could be worse. That'll be okay. All right, Datadog is done. We're going to move on for the essence of time to hang out with you guys some more. Palantir must roll today. Palantir has been bonkers. Now, I almost didn't take Palantir yesterday, if you remember, because I was saying that one of my rules is, or has been, which I am abandoning as of today, not to buy something when it's over $10 a strike. This was like 1170. And I was like, you know what? That's close enough. Let's go for it. Today, that same trade that I put on for 1170, which was the 108 calls in Palantir. That same trade, the 108 calls on the, what expiration was that? 523. 108 calls. 1170 is now 2235. So I'm basically up 100% on this trade so far. It's okay. Up 100% so far. All right, now let's roll it like I talked about earlier. Went from the 108 to 122. If I can get it to 1170 or better, another risk-free trade. So 108 to 122. Now, why the 122? It's got plenty of liquidity, but it was mainly about the price. If I could get from here to here for 1170, it would be risk-free. And it looks like it's going to be around 1212. Let's freaking go. Absolutely risk-free trade in Palantir. Thank you very much. Now, all this stuff that we're doing right now, we will be doing in all the detail later on. And I don't expect you to understand everything that we're going through right now. So let's see if I can get filled here. On Palantir, working 1210. Place. Let me try 1205. Oh, 1207. Yes, let's go. 100% free trade. 100% free trade and Palantir. Beat that. Beat that. And then we still own the 122s, by the way. So we moved it up from the 108s to the 122s, and we still own the 122s. So I took in $12, plus I still own this option worth another $10. Now, if I am correct, that's everything I needed to do. No new trade set up today. Do one last check on Etsy. It's fine. I mean, it's a couple cents under where we got in. No big deal, but it's still not under that 50-period EMA, so that's fine. So, okay, so we're done with trading. So, pretty cool. I am excited about that. I'm glad that I can share that with you guys. Now, of course, certainly beyond the scope of the first lesson in OVTLYR University. So, before we jump back in, do you guys have any questions about OVTLYR University? And we're going to go back to it. I'm speaking to the gentleman here online with me.
Yeah, nothing at the moment.
Not on what
That's
you
pretty
taught.
clear.
I got plenty of questions of what on the trades.
No, I get that.
Some things, and then I get lost, and then I understand because you come off the screen and you do something behind the screen, so I can't follow the cursor. I don't know what's going on in the background, but the curriculum, straightforward, easy going.
Cool. Awesome. All right. So let's do this. How do stocks go up and down? Many people want to buy a stock and the price will go up, right? If many people want to buy the stock, the price will go up. It's that old cartoon that I show. In fact, I'll show it up right now because it makes sense for this conversation here. If a lot of people want to buy the stock, that drives the price up, right? This is what's going to drive the price up. If nobody wants the stock, it's going to be dead money. If everybody's screaming, sell the stock, it's going to go down. This is so critically important here. And this is where I think a lot of people go wrong is because they feel like, oh, I'm going to catch the bottom of the stock. I'll be the one guy who's saying, oh, this is a good buy. And then how long does it take before everybody else shows up? 6 months, right? Maybe a year. Or everybody else is screaming sell and they're the one guy screaming buy as it's continuing to go down. Don't do either of that. You want to go with the herd. Sounds crazy, but you want to go with them, right? Because they are going to move the trend. Everybody collectively can move the market. You on your own are going to get run over by the market. So if many people want to buy the stock, the price goes up. And if a lot of people want to sell the stock, the price goes down. Right? If they no longer want to own it, the price will go down. If they do want to own it, the price will go up. Pretty simple. But news, emotions like fear and greed and excitement, and company events all play a part. So a couple news examples, right, would be earnings would be one, right? When the earnings come out, we can see big moves up, we can see big moves down, and sometimes we don't see any moves at all, right? Maybe there's not a lot of excitement, but it can go either way. Even rumors can help drive a stock price to change. And this is what I talk about when it's leading up into earnings, when people anticipate giant gains in a stock, they get all excited, they buy it up, and then the next thing you know, it crashes back down because nobody actually got what they wanted from the earnings report. So that's the buy the rumor, sell the news type thing.
Hey, Chris.
Yes.
Real quick. Like, I remember first paying attention to stocks years and years ago, and people said that stock prices were basically built in months in advance. And that things, like, I mean, at one point it was a year in advance, and now it seems like it's contracting. Is that true just because of technology or things like that? So news and emotions and, maybe the president tweeting from the throne could change stocks dramatically, where it used to be such a wide gap that people would say, oh, that's months away. That's months away.
Well, that makes sense, right? The news cycle has shortened up for sure. We can definitely say that. I think it's more to do with people used to say, and I don't hear this as much as I used to. And when I do hear it, I just laugh. Somebody's like, oh, the price that's already priced in. That's already priced in, right? Oh, they got a new product coming out. It's already priced in. It's like, okay, if you say so. And so I think that's what they're trying to say here is that there's nothing you could possibly know today that is not already priced into the stock. Meaning if there's a new Apple iPhone coming out that's actually going to be good, unlike every other one that's been the same for 10 years, the price could go up because of that. And so it's already going to be priced in before anybody else knows about it. And so I'm not entirely sure, but I think it's more of a I think it's more of a function of the news cycle being as fast as it is now. And really, you're right, dude. Like within just a couple moments, Donald Trump could tweet anything and change the game for everybody, right? We could all be way wealthier or super pissed within 5 minutes. It could be that fast. So great point. And the market is like a giant auction where prices move constantly. And the market is an auction, So I hear people talk about fair value of a stock, right? They've assigned some sort of fair value, meaning that they say the value of the stock should be X. But if I say the value of Palantir should be 100, Paul says the value of Palantir should be 120, and then Joe says the value of Palantir should be 75, who's right? I don't think any of us are right. I think the only thing that matters is what can be traded at the market right now. And that's why I say that's the giant auction. Joe's right, though.
I'm always right.
Is that what your wife says?
Yeah. Let's not ask.
So what is the stock market? The stock market is where stocks are bought and sold. This is where you come to town, right? This is the meeting place. This is the farmer's market. This is where you bring your produce, and this is where you transact with someone else. And in this case, my produce is dollar bills, and Joe's produce is Palantir at 75. So I could say, sweet, Joe, you know what? If you want to sell Palantir at 75, I'll give you my dollar bills, and we'll move on. And Joe's like, sweet, let's make it happen. And the great thing about that is that today it is all automated. It's all digital. And back a few years ago, which boggles my mind, you actually had pits of people screaming at each other with pieces of paper, being like, oh my God, I want to sell it at 50. Oh my God, I want to buy it at 12, right? They would just like, and I think to myself, how did that ever work? How did that ever work? But now it's like instantaneous, right? It's going to go from A to B, and you're going to be able to get whatever stock you want almost instantly. And it's like an online store for buying pieces of companies, kind of like if you're going to go into Amazon. I think that's actually one of the slides on here later. But like you can go to Amazon, right? And you say, okay, I need a phone case, I need a Scrooge McDuck bobblehead, and I need a new James Bond DVD, right? And so you can put all three of those in your cart, just like you could say, I need Datadog, I need Etsy, and I need Palantir stock. Just makes it super easy. You don't need to go anywhere. It's all done through apps or websites. So some examples of websites could be like Robinhood, or Tradier, or Tasty Trade, something like that, right? And then there's famous stock markets like the New York Stock Exchange and NASDAQ. I have a funny NASDAQ story. A few years ago, we went to New York City and we drove there, which was interesting, right? We drove from Dallas up to Maine, and we stopped at a few different places along the way, like Nashville, Boston, New York was one. And we roll in, and my wife had booked the hotel, and she's like, okay, it's around this corner. And so I go around the corner, she jumps out the car to go check us in, and I'm like, I'll make the block trying to figure out where we're going to park. And I go to the end of the block, and there's the NASDAQ, and there's Times Square. And I was like, what just happened? Oh, I was not ready for this at all. This is she could not have booked a better hotel for me. I was 10 feet from the NASDAQ. That was so cool to me. So that's my NASDAQ story. So let's go over here. And of course, it's open during business hours, Monday to Friday. It actually used to be traded 6 days a week, if you can believe that. But I don't remember when it was, like the 50s or something like that. They changed it to just be Monday through Friday. Now, what is a ticker symbol? Now, JC said he can't spell stock, but maybe he can spell Apple, right? AAPL. Maybe he can spell Tesla, TSLA. Every stock has a ticker symbol associated with it. Now, you might not know what they are, and that's okay, right? So some platforms, you can type it in up here. You could type in McDonald's, like McDonalds, and it'll show you McDonald's Corporation right here. Or you could go to something like Yahoo Finance, and you could probably type something in like that too, like McDonald's. Oh, no. Let's not do that. This is taking too long to load anyway. You could just go up here and type like McDonald's stock, MC Donald's stock, right? And then it's going to show you right here in Google. You don't even have to go anywhere else. What the ticker symbol is that is traded on the New York Stock Exchange. It really doesn't matter, but trade on the New York Stock Exchange for McD, McDonald's Corp, and it'll show you the price, which is pretty cool, right? And it'll show you year-to-date price. It'll show you your 1 year price, everything right there on Google. You don't have to go anywhere, right? So let's think of something else like Disney, DISNEY stock. The Walt Disney Company, right there. New York Stock Exchange, Disney. Show you your year to date, right? Shows you everything you'd want to know really in one spot. And then you can get additional info, more about Walt Disney, and it'll show you all kinds of fundamentals. It'll show you, their dividends. It'll show you their market caps. It'll show you all kinds of stuff that you really don't need to know. Right? But point is that you don't have to memorize all of them. I know I haven't memorized all of them. I still see new ones every day I don't recognize, but that's a really easy way to find out what is the stock ticker, right? So there you go, JC. Now you can spell any stock out there. So they're usually 1 to 5 letters long, right? There's some like X is not Twitter, and it will never be Twitter. X is the United States Steel Company. And then there's some like Berkshire Hathaway is BRK.B or BRK.A. All kinds of stuff, right? So you can use a ticker to search for any stock online. And then you can think of it like the stock's nickname or its ID. Super simple. And next, what makes stocks move? Company news, good or bad, like new products or earnings reports. This is when they get priced in, right? That's when the prices can move. Big world events like elections, wars, natural disasters. Now, I know you guys have heard my election story, but I want to share this real quick. So the election between Donald Trump and Hillary Clinton was one of the times I blew up my account, and I was not very happy with myself. Let me put it that way. I had heard the rumor that Hillary was going to win, and if Hillary won, stocks were going to go gangbusters. And I'm like, okay, cool, sounds good. But if Donald Trump won, stocks would crash. And I was like, awesome. I have the perfect strategy for this, beyond the scope of what we're talking about here. But I set up my trade where if Hillary won, prices were going to go up and I would make money. If Donald Trump won, prices were going to go down and I would make money, just not as much. But if stocks stayed where they were, your boy Chris was hosed. Now, remember, elections happen on Tuesdays, okay? And me in my genius ways thought, oh, I'm going to be so rich by Friday. I'll just put it on Friday. It'll be perfect. And I don't know if you remember, but the first time Donald Trump was elected, stocks went up for the next 4 years. But they did not do that between Tuesday and Friday. So stocks were going up. And I remember I went to the movies on this day, on that Friday of expiration, and I'm watching my phone and I'm like, the stock price is going up, but my account is going down. What is happening? And by the end of the day, I think it was the Star Wars movie with Rey in it. I don't remember which one exactly, but I think that's what it was. I closed my trades. And I'm like, you freaking idiot. I just lost 2/3 of my account in the span of a week because I thought I was being clever with this trade. It was exactly the right trade, but executed the wrong way. Absolutely the wrong way did I execute that. So anything can happen, right? Even when stocks went up, I still lost money because I didn't know what I was doing in that particular options trade. But surely that'll never happen to you guys. Y'all are way smarter than me. And of course, analyst upgrades or downgrades. Man, I've never been more pissed when I'd wake up one morning and be like, SoftBank downgraded the stock. And I'm like, mother fricker, you leave my stock alone. Okay. Keep my stock's name out your mouth. Right. That's what I was thinking at that time. That's what
Chris,
I was thinking.
what did you do wrong with your trades on that Friday?
Oh, here we go. You asked for it, JC.
Oh, you're going to set off now, JC. Well done.
You sent me down a tangent, JC.
That's okay.
All right.
I'll learn.
So
Buckle up, it's going to be all right.
yeah, let me show you. Okay. Is this the one I want to see?
Click.
Or let's see. I'll go with this one. So open image in new tab, and then I'm gonna draw all over it. Okay. So just because JC wants to go down a rabbit hole, here we go. So this is November whatever in 2016. Okay. And this is the SPY. Let's say the SPY is trading at $50. It wasn't then, but let's just use for example. I'm going to make this bigger so we can all see. So all that had to happen was something. It had to go up or it had to go down, right? One way or another, it had to do something. But between Tuesday and Friday, the price went like this on the market. And that was it. That was it, right? It had to go at least this far in order for me to make money up. It had to go at least this far for me to make at least something going down. The problem was that I didn't know what I was doing, like I said, and it only went this much. It only moved this much. Now, this is not a trade I would recommend to anybody ever at this stage of my life. But at that time, I was like, I'm so smart. I'm such a genius. I still have so much hair on my head, and it's going to go up from here, right? Hillary's going to win, and it's going to go up. Hillary didn't win, but it still went up. In fact, I remember going to bed that night. JC, and the futures were locked limit down. That was the first time in my entire life I'd seen futures locked limit down. And I was like, whoa, okay. Wasn't expecting that, but okay, I'll still make money by the time the morning comes. The next day, the market's up and continues to go up, but not up enough for Chris to make money. That's what happened right there. It went up, but just not enough. So, yeah, that's my great story of the day. Thanks a lot, JC. I appreciate you rubbing salt in those wounds. But anyway, what is a broker? This is our final slide on here. And then for those of you in the chat, we'll spend a few minutes answering questions as well. So go ahead and put those in the chat. I probably won't be able to catch every question that y'all have put in the chat already. There's like 1,000 comments so far, but I'll do my best. So what is a broker? A broker is a service or an app that helps you buy and sell stocks. So for example, Robinhood, right? You can log into Robinhood and you can say, hey, I want to buy 100 shares of Robinhood, right? I'm in the Robinhood app. I want to buy Robinhood stock. Let me have some right now. And they'll help you with that. Or there's E-Trade, TD Ameritrade, Fidelity, all kinds of brokers out there. You can just Google, who's a broker? Give me a broker. And then this would be like the storefront for Amazon, right? This is the only way that you can navigate the market. You need a brokerage account to start trading. You can't go into Google Finance and be like, okay, let me go back to Google Finance on whatever this was real quick. You can't go into Google Finance and say, give me some Walt Disney, because Google's not going to provide that to you. Google's not a store. It's an information spot. It's not going to give you what you need. So you need a broker to execute the trades. And some brokers let you go for free. They let you trade for free, and others charge some fees, right? If they charge you, if they do not charge you for anything, I want you to keep something in mind. And they say this in social media platforms. The statement is, well, if it's free, you are the product, right? If Google's free, how do they make money? They're making money by tracking you. If Facebook is free, we all know that Facebook tracks the mess out of you, right? And they use that to make money. If your broker is free, that means they're using you in some way to make money. Now, most of the time they do this by skimming. So let's say that I want to buy Robinhood shares at $50. $50 exactly. What they will do is they'll go out and source it for $49.98. They'll sell it to me for $50. They'll pocket those 2 cents. And if I'm trading big size, that could be hundreds of dollars. That could be thousands of dollars in a single transaction. To me, didn't make any difference because I still want to buy it at 50. To them, they just made thousands of dollars in a single trade. And so that's how the market works whenever you have a free broker. You want a broker. I know it sounds crazy, but if I can spend $1 and make more money than I would getting it for free, it's worth it. It's worth it. The best brokers out there will give you price improvements. So instead of them taking it for $49.98 and selling it to you for $50, they'll actually pass that $49.98 straight to you, or maybe even 1 penny instead of all of it. So, all right. So that's everything on the first lesson. So the objective here was to set the stage, let you know who I am, of course, and give you some ideas of what the context is of the market, right? Because JC had such a great point. Lots of people have no idea at all where to start. OVTLYR University is here to change that. So before we go to the chat, are there any questions from you guys here watching live that I can help answer?
All kinds of options questions, but you say that's coming up later, right?
Right. Yeah. Let's not go down that rabbit hole today.
No, okay. Yeah.
All right, cool.
Don't forget to raise your
Yes, sir.
I'll see you. I'm just saying, don't forget to raise your hand.
Good point. Thank you, sir. This is a very professional classroom environment. We will all make sure to raise our hands. Okay, let's do this. Let's trying to find the right layout that I want. This layout. Let's go to the chat and let's see what questions I can answer. Can you guys see the comments coming through on your end over on the right hand side? Okay, cool. Let me scroll up and see where I can answer some questions here.
We can't see those, but I have it open on my iPad, so I can
If
see
I
them.
pop it up here, can you see that? Y'all can see that? Perfect.
Yes.
Okay. So I'll answer this question, but it's not really pertaining to this particular lesson here, but I'll do that. Can you explain why the returns are higher when using options versus stock? Could you use Hood as an example? So without getting too deep, if we go over to Hood, and I just closed the 53 calls on May 30th. Right, so I no longer own anything in Robinhood, but I closed this one just a moment ago. When I bought these, I paid $7.50. Oh, no. Well, I bought the 48s, right? 48s, and I rolled up to the 53s. So I started at $7.50, and I rolled it for $4.12, and then I sold it just a minute ago for $10.65. Now, because of this, oh, you guys can't see my screen. I'm sorry. There we go. Because I closed it at $10, right? We'll just use some round numbers here. Bought it at 5, sold it at 10. That was a 100% gain on the option. The stock price went up $5. The price of the options went up about $10. Let me rephrase that. The price of the stock went up $5. The price of the option went up about $5. But the options trade at a 100 times multiple. So because the options are a derivative, like I said, way beyond the conversation of this particular lesson, but because the options I only paid $5 and I get out of it at $10, that means I have a 100% gain. It's still the same $5, right? $5 on Hood, on the stock, $5 on my option, going from 5 to 10. But because I only paid $5 and I'm getting out at 10, that's a 100% gain versus the price going up $5, which is a 8% gain. It's a great question. Let me see. Give me just a moment here, guys, to scroll through the chat. And if you guys see any questions as well, let me know. Was it a prerequisite that everyone wear glasses? Yes.
Yes.
It comes from staring at computer screens all day.
Yep.
Mine are readers. I don't need them to see that person's a smart ass.
Okay. Jose had a question. Good question here. This is awesome. He's wearing glasses too. How would you see if your broker is skimming, as it's probably they're hiding it? Honestly, there's probably no way that you could. I don't know of any way to be able to see that. Huey asks, do you trade options or do you also trade stocks directly? So I trade options because of the leverage that I can get. However, you can do anything with options or stocks that I'm talking about, right? You could still get in at $45 and get out at $50. You just won't have the same sort of leverage if you're doing it with stock versus options.
I think my comment there would be, in some instances, you can't trade options, right? So you probably have to go long on stocks. So inside like your retirement accounts and such, you probably don't have the option to trade options.
Well, I trade in an IRA account.
Oh,
I
you
have
do?
multiple accounts, yeah. And it depends on the broker, right? If you have the right broker, then you can trade in your IRA account with wide open permissions.
Oh, nice. Okay.
Chris, why do you choose to change the greed index of 10 as a marker for likely reversal, like for Hood? Okay, great question there. So this is an outlier platform question. Let's go to that. And here, we'll go to Hood. There we go. So this is something that I found, and this is more of a trust me, bro type situation because I don't have the data to give you for my exit signals here. So 0 to 50. So if there's any sort of greed, what I did, this was a couple years ago. Now things have changed since then and probably could be updated. Was I went through, I had Mahesh send me a download of all these trades, and I went and I found the ones that started in the fear side, and I said, okay, where did they peak on these trades, right? If it had a fear value of, in fact, this example right here, if it had a fear value of 48, 47, where did it peak in price? And so I went through lots and lots and lots of data. And what I found was the peak price value correlated most closely to 63. So getting in any sort of red, getting out at 63. So I thought that was very interesting. So I left that as one of my rules here. Getting out at 63 if it has any sort of fear value. If it's between 50 and 75, I did the same thing. If it had a buy value and it was somewhere between 50 and 75, like this one here was 59, looking at it, say, okay, where was the max price according to where it correlated on the heat map here? And it was about 10-point move. And so I was like, okay, cool, I'll run with that. And you'll see it's actually different on the downside with puts going short versus long calls going up or buying long stock. And then 75 plus, like when it starts getting really greedy, that's when I start getting really nervous, right? Let's see, was this over 75? Yeah, this buy signal came in here at 77.29, and then it very quickly snapped back. And so we want to avoid that. The further up it goes in greed, or the further down that it goes in fear, the more likely it is to snap back. You can see the snap happen right here. You can see a bullish snap happen right here, and then again, right? We don't want to be on the opposite end of the snap. We want to be in and out as it's running up before too many people get too greedy, and then it snaps back against us, right? Great question, though. So Nate, my company's 401k has an investment selection that I can make that allows me to trade up to 80% of the 401k. However, I want to trade, including options. Dude, that's awesome. That's so rare, too. Super rare. Daniel says, I have an IRA and a Roth IRA using options and can even trade them on the chart in TradingView. Oh, cool. I didn't know you could do that. Excellent. Let's see. Stas says, thanks for the answer. Makes total sense to me. So let's take one more question from the chat here. Let me actually go way up. I'm going to go way up. Still going up. There's like 14,000 chats, by the way. You guys are awesome. Theo, Chris, taking into consideration the half ATR for the exit signal, is it a 14-day period ATR or something else? That's a great question. So for me, what I look at is just the default ATR value. So looking down here in TradingView, and it doesn't matter what platform you use, if you can add the ATR indicator, add that. And so this is just the default. I think if I do this and if I do, where is it at? Where's the thing? There we go. Settings. There. Inputs. It's just the 14-day default that I use. Nothing special, nothing fancy. Could it be better? Probably. There's definitely always a better way to optimize these. In fact, it may be better if you optimized it for each individual stock. But what I like to think about are core concepts that are good universally, right? A universal principle, like the 10-20-50 trend template. Always, always, always shows you when the stock is moving up. Always, always, always shows you when the stock is moving down, because it's just math. So because it's just math, it's a universal template that we can apply to everything. And so to the ATR question, as great as it is, I just use the default. Nothing fancy, nothing special. I just use the default value. And this gives me an idea of what the volatility looks like, right? Because if you go too long, then it might not have the same, it might not be able to keep up with what's going on in the stock today. If you go too short, it might be all over the place. Way more noise than you'd want to. So that's going to wrap it for the very first lesson in OVTLYR University. Was this good? Oh, fist bumps. Yes.
Fist bump.
Let's group fist bump. I love it. Great idea, Ozzy Ian. We'll make sure we do some group fist bumps in here. And thank you all for coming and watching live. I am really excited about this. We have 9 weeks, twice a week, where we will be going through everything that I could possibly teach you. And of course, the first couple of weeks, you might know what's going on, but by the end of it, it's going to get real deep. It's going to get real hard. It's going to get real fast. So you need to make sure you're taking notes along as we go. So you guys have a fantastic day, and I will see you all back here tomorrow morning, and I'll discuss everything that that I did on the trades tomorrow morning on that live stream. Should make
What
it
time
pretty.
tomorrow morning? Time?
It is always 7:45 a.m. Central Time. I drop off my son at school. I come back and hang out with you guys. That's what I do.
It's 9:45 our time.
Let's
Okay.
go.
All right. I will see you guys tomorrow morning.
Hear the
And we'll
gears
talk
working.
soon.
Thank
Thanks,
you.
Chris.
Thanks,
Hey,
Chris.
everybody.
Thanks, Chris.